Hi everyone, welcome to the PLG-Path again, and I'm Mitesh here. So basically, something very interesting we are going to talk about the Tiger Global Management. So we all know that like the Tiger Global Management is a big shot, big shot in the venture capital and private equity principles as a domain, and it's a primary VC as well as PE. It works like that, right? And as far as the Indian, startup ecosystem is concerned, it has been part of the major investments of market startups which have shaped our ecosystem, primarily starting with Flipkart, Razorpay, Dream11, Meesho, Cred, etc., like Zomato, and so we all know that about Tiger Global as for their speed and skill, how rapid and large volume investments they make, and which has actually led to the Indian startup ecosystems unicorn born organizations. So it has led to like as per the data we have, it's like in 2021 it was considered as a unicorn maker where more than half of the India's new unicorns were part of the Tiger Global India's portfolio. So we all know that. However, there has been some challenging organizations like BharatPay, Ola, Pharmacy, ShareChat, where like it has faced scrutiny over governance and other business issues. We all know that. However, a massive market shift started coming with the second half of the 2022 when the fundraising, the entire uh, funding winter, which we said, like it started getting immersed in our ecosystem, and it suddenly started affecting both the operators as well as the investors in terms of the portfolio and the returns, right? So that's where it started getting a bit of downturn. And one major issue currently it is facing is with the uh, legal taxations, which Supreme Court has just declared in the January 2026, citing that like Tiger Global must pay capital gains tax on the 1.6 billion dollars approx profit from selling its Flipkart stake to the Walmart, which happened 2017, 18, 17 probably. So that time. And it is what it is said that this was structured through Mauritius-based entities that had previously claimed treaty benefits under the India-Mauritius double taxation avoidance agreement, like which is called DTAA. Now the issue started coming when like suddenly the government has found out that the offshore structures simply having tax residency certificate is no longer sufficient. So it is enabling scrutiny of whether the entities have real economic substance or not. Now that is something where Tiger Global fell in some real trouble because the as per the speculations in the market right now, like they have a tax liability of estimating around 14,000 to 15,000 crores, INR, if we convert it, 14,000, 15,000 crore, uh, including like the principal tax and interest and whatever penalties are there, everything included in it. On the regard of that Flipkart stake sale to Walmart. Now this has suddenly come up as a major issue, and given the portfolio size of Tiger Global is concerned, it is not going to just impact Tiger Global as a VC and PE firm in India. Rather, it is going to create a sort of dynamic shift for the entire VC and PE ecosystem, the entire fundraising dynamics in the startup ecosystem of India, as is at least for as of now, for the upcoming few quarters, for 1 or 2 fiscal year for sure, because there is uncertainty in the new taxation systems, which needs to be more cleared according to the investors as well. So that is going to happen, and that is going to create a shift in India's tax treaty interpretation. Like, you cannot just say that the foreign investors uh, simply cannot just route capital through jurisdictions like Mauritius to avoid or reduce capital gains tax. That's what Supreme Court says right now, and that suddenly creates a shift from uh, form-based to a substance-based examinations in cross-border investigation taxation, and trust me, it's going to definitely affect or at least create a panic right now in the investor confidence as concerned. The sentiments are going to be impacted for sure, because nobody is having that clarity on the tax certainty to avoid any chilling foreign investment. So there is a prediction that structuring future investments may become more complex and costly as investors demand stronger tax indemnities and deeper due diligence. Okay, and how it is going to impact the largely the entire startup ecosystem, because this will create deal terms might tighten, the the fundraising phase, the pace of at which the fundraising happens in the entire process will get more tightened, and it can strengthen, it can get longer, which will impact both the operators and as well as the investors for sure. But the operators are definitely going to be impacted, because the term sheet valuations and exit provisions could include greater tax risk protection. So this might change the valuations, exit valuations, and timelines, as potential capital gains tax exposure is factored into the deals and investor returns. So this is definitely going to create uh, issues like uh, you know uh, ecosystem stakeholders fear that this will reduce liquidity and exit appetite of the investors funding in both early stage to late stage investments, late stage, like startups, which are both like bootstrapped or maybe a very matured startup as well. In short to mid term, it's going to happen. So the ruling sends a signal that India may prioritize tax sovereignty over treaty predictability, and like uh, there could be jurisdictions that have historically uh, reduced, uh, historically driven India's FDI through Mauritius and Singapore, that may actually reduce attractiveness, at least for the upcoming few quarters. That's a prediction in the market. Again, the market prediction is also based on a lot of panic which happened due to the entire chaos created in this Tiger Global scenario. So let's see how it proceeds, and it is going to definitely uh, impact, as well as on a positive note, maybe it can help to create a better structure, so that whatever loopholes are there, it can be reduced to an extent, and it can give us a more structured investment format into the Indian ecosystem. We will get to see that in upcoming years now. So yeah. That's all. Thank you.